Good morning, everyone. Today I want to show you how we trade before and after the regular 10:30 a.m. Wednesday crude oil stockpiles report, the regular crude oil report. But first of all, I would like to tell you something about this crude oil report release. It's simply that we don't trade the 10:30 report by itself. We don't activate the automatic system seconds before the report because we know that a huge move is going to happen. Because we don't gamble. Of course, we do trade before the report, probably not taking any new position after 10:15 or maximum 10:20. And maybe we eventually keep an existing position showing a clear profit situation, but always protecting that profitable position with a trading stop strategy. Either we are manually trading or we continue using our automatic strategy, Falcon strategy, for example, if we have more than 35 ticks profit, for example. If not, you better close your position at 10:25, 10:26 a.m. because, as you probably know, 10:30 a.m. is normally a very high volatility period for the average retail trader with big spreads, lack of liquidity period, with an obvious high risk scenario for you. So the question is when to retake, or when we can retake the trading activity after the referred 10:30 crude oil report release. Let me tell you this is not a simple question to be answered in terms of time, in terms of telling you have to wait 5 minutes or 2 minutes or 3 minutes in order to be safe in terms of your trading, your risk. The answer is it will depend on how soon the technical stability will be reestablished. And TradingTotal has a very good tool to track, to understand, to read this stability condition. Our proprietary EOM indicator, this one. This indicator here, the plotting line is in red color, right here. This is a very simple indicator. This indicator forms peaks. This one, this big one, this is a big one peak, right at the opening bell. This one, somewhere. And when those peaks happen, the message is an unstable condition is present or will be present very soon. We found that those peaks with reading greater than 1,000, you can see here, this is 2,000, 4,000, these peaks are something like almost 2,000, this is a lower, 1,000 and something, okay? Those peaks with readings greater than 1,000 are very relevant technical issues, and you have to take in account this EOM alert, okay? Normally the EOM shows big peaks during the crude oil report release, obviously. You can see here, this is a period, 10:30 begins here, right here. Note that you have more slightly higher peaks in this time, but this is second fractions, okay, of seconds. You can see here this peak. This unstable condition is a typical reading for EOM 10:30 a.m. on Wednesday, okay? The key is to be aware of the EOM reading, looking for a stable condition before activating the automatic system or taking a new position if you are a discretionary trader. So when you are heading into the 10:30 a.m., you have to stop your trading. If you are manual trading, you can take a new position until the stability conditions are good enough to retake your trade. If you are an automated trader, well, stop your robot. Click here, pause, okay, until the stability condition is safe enough, okay? And you have this condition right here. This is a visual concept, simply visual concept. You have the reference here, immediately after the 1030 report is being released, okay? This is the reference. You need something much better than this unstable peaks. And I personally believe that you have the stability condition here. So 1033 or 1032 or something like that, you can activate your robot. And look this is the breakdown. This is the breakdown we want to trade. Not this mess. Not this condition. This is a fake. This is a failed breakout trying to go through the 450 moving average. But we take this breakdown, okay? And this is a very nice trade. You reach in only 6-7 minutes the target area. Which is the target area? Well, the robot knows which is the target area, but if you are a manual trader, S2 is a good target, and you have to analyze daily time frames and other things that we are not covering right now in this very short lesson. Okay, you can see that we have another peak right here. What is this? This is the end of the down move. This is the end of movement. This EOM indicator is an amazing indicator in order to know when to exit a position. If you have only one peak, maybe it's not strong enough in order to leave your position, but you have to be very, very aware in order to identify other technical signals. For example, this is a technical signal. This is a very poor new low of the day, and if you are bouncing and creating additional demand, you go up, well, get out of your position. This is after this peak. This is very relevant, okay, very relevant. You have another more or less stable condition. You can activate the robot right here. If you get in this trouble area, well, you can stop again and retake when your EOM is showing you a more stable reading, okay? This is the case. If you activate here, you take this very nice long position. You can see the final part of the trade, but it was very profitable, okay? Well, so EOM is an everyday indicator. You can use it not only on Wednesday during the crude oil report release. It's an amazing indicator in order to decide when to activate the robot and decide when to close an existing position, as I told you before. Okay? Well, thank you very much. Thank you for listening. Bye-bye.